I don't think enough people talk about how hard it is to sell when you're actually up big on a position. Everyone's always focused on the entry. What's the next 5x? What are you buying? But honestly, I've found the real challenge is knowing what to do once something you own starts ripping. I've had this happen a few times now. I get in early on something, maybe just messing around with small position, and then suddenly it's up 200%, 300%, sometimes more. And I'd love to say I calmly trimmed, locked in profit, and moved on, but that's not how it went. Usually you start getting emotional. You feel smart. You tell yourself it's going higher. You start thinking about what your gain could be if you just held a little longer. Sometimes you even add more. I've done that. Then it pulls back 40%, and now you're stuck. Selling feels wrong. Holding feels worse. You just sit there watching it bleed. One thing that's helped me is trying to think of selling the same way I think about buying. When a position gets big and my portfolio value starts growing fast, I'll stop and ask, if I didn't own this stock right now, would I be comfortable putting this amount of money into it at this current price and chart? Most of the time, the answer is no. That's when I know I probably need to trim. I don't want one name becoming way too outsized just because I'm emotionally tied to it. Rebalancing feels more like a risk management decision than some emotional call to dump the stock. And honestly, it helps a lot. Another thing is selling in chunks. I might trim a bit after a double. More if it keeps going. That way I'm locking something in, but still giving it room to run. I try not to beat myself up if it goes higher after I sell. That's just part of the game. I've still made plenty of mistakes. I've round-tripped some great trades because I got greedy or froze. But I'm starting to learn that having some kind of exit mindset early on makes everything easier. Even just writing down a rough plan or price target helps take the edge off when it comes time to decide. Anyway, just share my experience. If you've ever held too long, sold too early, or felt stuck on what to do when you're up big, you're definitely not the only one. Curious how other people think about this stuff too. Which stock would have given you financial freedom if you never sold? When one has been investing for a while, there always comes that moment where one thinks, damn, I really shouldn't have sold that stock. Of course, I know focusing on the present matters more, but sometimes looking back comes with huge regret. So what's the one stock you personally regret not holding on to longer? Let's read some expressions quoted from some regretful investors. NVIDIA was the second stock I ever bought. 100 shares at $18 back in like 2009 or 2010. All they made was computer parts. Sold at $40 because it was an all-time high to move on to the next thing. If I had those original shares accounting for splits, it'd be close to $750K. Another regretful investor said, I owned Audible when it was a penny stock. Today it's owned by Amazon. I owned Google when it was $60 before any splits. I owned Tesla at $40. Sold everything for very small profits, but felt good about it at the time and feel bad about it ever since. Good quote about investing. I've made a lot of money in the stock market, but I've been angry the entire time. If people ever wonder why rich people are not happy, it's because of this. Yeah, they may have 10 million or 20 million, but they could have a 100 or 500 million by just changing one or two wrong decisions. And the guy with 500 million could have had 10 billion if he just didn't sell a little too early. But the reality of the stock market is that it's like Vegas. You can't win all the time. You just hope to do a little better than before. For every person that won big is some poor person who just gambled their life on a sure thing. There's both sides of the stock market, but we only see our small gains and losses, but someone is losing big on every play and every move. Here is a story time from another regretful investor. In summer 1996, my college buddy, who shared my enjoyment of Macintosh computers, had saved up summer lawn mowing money and wanted to buy about $2,000 of Apple stock. It was around $16 to $20 per share, I think. He tried to convince me to also buy Apple stock. I didn't like the risk and explained all the reasons why it looked like Apple was circling the drain to a certain death. The next summer, Steve Jobs returned and released iMac, and the rest is a wealthy history that does not include me. Years later, I reconnected with my friend and asked him about his Apple stock from that summer, and he confessed that my reasons to not purchase also convinced him to not purchase. so both of us missed out. Another regretful investor by the name Cajun Reeboks says back in 2010 I purchased 320 shares of Netflix for around $25 per share, $8,000. It progressively turned positive 60% within the next few months. I was excited and was sitting on around $13,000 now. This was my first large single stock purchase, so I kept holding, and then the Netflix/Flixster debacle happened, which caused my holdings that were up 60% to now be down 60% within a very short time period. I don't recall how long it took, but I do remember that the stock eventually recovered, and I sold somewhere around my entry point just to be done with it. Doing the math today, those 320 shares today would be worth $380,000. Another regretful investor, who goes by the name FarCommercial8434, says, back in 2021, I had purchased like $200,000 worth of long-dated way out of the money leaps in U.S. Steel when the stock was at $7 to $8 per share, held for like 5 months, and was down something like $100,000 on them. And Theta was speeding up. All of a sudden, like 45 days from expiration, the stock shot up to my strike price, and after sweating it out for 5 months, thinking I was going to lose my ass, I was up like $40,000. Immediately sold all of them, and was happy to get out. However, the stock went up another $7 per share between when I sold and expiration, and if I would have held until expiration, those same leaps would have been worth about $3 million. I also made a couple really good trades after that, and if I had $3 million to put on those trades, I'm sure it would have been something like $10 million after. Another investor said, I learned about and became extremely interested in cryptocurrency when Bitcoin was around $25. I was also very much in the correct mindset to be a long-term holder. I remember saying over and over again, if I ever bought Bitcoin, I'd hold it until it became worthless or life-changing. I was in college with finance concentration, which ended up dissuading me from making the purchase, because at the time it was being touted as a currency, and it was clear as day that it was terrible for this use case, too long to transact and deflationary. I watched it closely for years before finally giving in and buying during the 2017 bull run. Man, if I'd only spent $1,000 to buy back when I was first interested, instead of waiting, I'd have a little over $4 million and a 4,000x return right now. Another investor says, mine is Tesla during COVID. Was about to hit the buy button and then saw a CNBC piece that they may stop producing cars to make ventilators to help during the pandemic. I should have just hit the buy button. It went up like a rocket since. It haunted me for a good 3 years. I'm over it now, but it was tough. In late 2019, I prayed to the gods, please let there be another 2008 crash. I'm 99% sure I caused COVID because literally a month after I said that, lockdown started to take place. I was like, this is it, the crash I wanted. I literally bought Microsoft at its lowest. I got super lucky with the timing. Then me, the young Warren Buffett, knew that a second wave of COVID was coming. So I sold my stock and was going to wait for it to go down again. It never went down. It kept rising. Through the second COVID wave, I still made a decent chunk from selling the shares, but I should have kept it. Another investor said, I bought ASDS last year when it was around $3. Sold all my shares when it was in the $1.30s. And when I checked it on over the summer and saw it was hovering around $60, I wanted to vomit. I made a huge profit, but I really wish I would have held on longer. Had a similar story with ARKLB. Story time from a regretful Palantir investor who said, between 2020 and 2023, I accumulated around 5,500 shares of PLTR between $7 to $23 per share. Like an idiot, I sold massive chunks at $55 and again at $85, now leaving life-changing money on the table. And why did I sell then? Because I was a scared chicken, not because I needed the money for something. I kept getting emails from my broker saying I was too highly allocated into one stock and that I needed to diversify out of it. I'm so ashamed, embarrassed, and mad at myself. Back to me, and I'll say this, there are only two kinds of regrets. One is of not selling and seeing the price crash later. Here, you didn't realize the gains you already had, and are now sitting on much lesser gains, possibly losses. The second is of selling early and seeing the price rise later. Here, you locked in gains, but did not see more. One of these is much harder to bear. Yes, it's the first one you had the gains and could have locked in, but didn't. The second one is much easier to live with and rationalize. It wasn't meant to be, and at least you locked in gains. Anytime I think too hard in a situation like yours, I tell myself, better to have the second type of regret than the first. Understand is that it happens to most good investors. The second thing is that it's okay to feel and think about regret. But once you've thought about enough, you normally get tired of continuing to think about it. You deal with those feelings and move on with your life. You accept that you can't change the past. A quick anecdote. I have a coworker that bought something like $10,000 of Tesla stock and rode it up to $100,000 over several years but got tired of Elon's antics and sold right before the huge run-up during COVID. That $100,000 would have been $1 million. But he didn't wallow in despair. He continued investing and eventually put a big chunk of that into NVIDIA and now has over $1 million in his accounts. First rule of investing: don't lose money. Second rule of investing: don't forget the first rule. You follow the above rules. Don't stress yourself out. That emotion is greed. You must define your win conditions and then accept winning. For example, my win conditions are beating HYSA, achieving 10% gain, beating S&P return this year and lifetime rate. Any greater return is nice, but chasing insane percentages for shorter terms is unrealistic. A big gain might offset a poor investment/trade. So I need some bigger gains here and there? Sure. But I'm not going to base my life on that, nor regret such decisions. Frankly, it would be reckless, and statistically, you'd have many more instances of lost capital, but perhaps you wouldn't remember it, especially with PLTR in the 2021 bubble. And even now, the valuation isn't based on fundamentals, but administrative support and the trajectory of this country over the past 24 years. If a couple things had turned out differently, it would never reach $154 per share, and you'd be putting yourself on the back. The better thing is to observe and learn, reflect on what was correct or not, while remaining detached in the larger statistical picture, and plan ahead for the next move. I had ASDS at $7, Rocket Lab at $6, SMR at $15. I'm not mad because I made good money off those even though I sold early. Could I have made more? Yes. Could I have just as easily lost all my gains on these risky nonprofit companies? Yes. I made good money and put it on other winners like Google and NVIDIA, so why would I beat myself up over FOMO? You're never going to get 100% of the earnings that the stock market can potentially give, so just be happy with what profit you made, especially if you're beating the S&P's returns. You shouldn't treat the stock market like a casino chasing the highest gains, or you'll most likely end up with nothing. You need to trade with a combination of safety and smaller, risky positions that you have high conviction in. If you trade like this for the rest of your life, you'll be rich. You won't be rich if you go all in on some high-risk company, and it tanks. The key is to make up these mistakes with gains from other investments. I've sold investments right before they cratered, and I think that's just as important as holding for a potentially bigger profit. Avoiding losses is vital for investing. The truth is the odds are against you because it's impossible to know which assets will rise to the top. You need to have conviction and a reason to hold. If you don't have conviction, you are increasing risk when holding assets longer than you feel comfortable, and you will have regrets of how you should have sold if your investment crashed. Subscribe for more content and control your emotions when investing.